Hey, it's Eric Powell with the Future Mill. Right here, I have the IRS document that talks about the advanced child tax credit payments for 2021. These are set to start in July. This is the official IRS document here. I also have this if you'd rather read it. It is down below, so you can see the link there. I'm going to go through first the changes, and then I'll actually go into the details of what they are talking about. So what does the expanded credit mean? The credit amount increases for many of the taxpayers. The credit for the qualifying children is fully refundable, which means that taxpayers can benefit from the credit even if they don't have earned income or don't owe any income taxes. I'll go ahead and go into that one. If you are not making any money or don't have to pay any tax, you can still get the credit if you have children. The credit will include children who turn age 17 in 2021. Previously, that was not the case. So for this year, for 2021, it will include 17-year-olds as well. Taxpayers may receive part of their credit in 2021 before filing their 2021 tax return. How this works is they're going to give you 50% of the credit in 2021, though usually what ends up happening is you file your tax return, you're going to get the full credit there. This way, they're going to give you 50% of it up front. Now, they are increasing what they are going to be giving you. So before it was $2,000 per child. Now we are looking at $3,000 per qualifying child between the ages of 6 and 17. So if they're between the age of 6 and 17, they're going to get you $3,000 in a credit. If you have a child that is under the age of 6, so newborn to 5 years old, you are going to get $3,600 per qualifying child. Now, if you have a child in 2021, generally what happens, this is what we saw with taxes for the 2020 year. If you had a child in 2020, when you go to file your return, they would give you that credit for anything you were owed. That's probably going to be the same case here when it comes to what is happening if you had a child in 2021. You will also, they're talking about having a portal, an IRS portal, so that you can log into and update your information. You do have to have a social security number to verify that child. But if you do that, you should be able to update that in a portal, though that information is not available just yet. So as far as the incomes go, depends on what you're making, because if you are married filing jointly or you are a qualifying widow or widowers, you can make up to $150,000. Anything over $150,000, you're going to start to phase out of this tax credit. $112,500 for heads of household and $75,000 for all other taxpayers. As far as the advance payments and what it's looking like, it's going to be July through December. Again, it's 50%. So if you think about this, what it's going to be is if you have kids between the age of 6 and 17, you'll get $250 per month per child. If you have children that are under the age of 6 all the way down to newborns, you should be getting $300 per month all the way through December, starting in July. IRS urges people to file their 2020 tax returns as soon as possible. What they're going to be doing is basing everything on your income of 2020. If you make too much money in 2021 and go to file your return, you could go to that portal if they get that portal live up and running. But what you will end up doing is in 2021, if you make too much money, they could take away part of your credit because you are not qualifying for everything, or you could end up owing taxes on that. So just be very careful with your income there. Eligible taxpayers do not need to take any action now other than file their 2020 return. Eligible taxpayers who do not want to receive the advance payment of 2021 will have the opportunity to decline receiving the advance payments. If you don't want to receive the advance payments, want to get the whole tax credit at the end of the year, you can do that. There is going to be that opportunity. So the IRS urges community groups, nonprofits, associations, education groups, anyone else with connections to people with children to share this information. I'm doing that right now. So per Kiplinger, also, here's just a little bit of more information. I'm also going to put the link to the Kiplinger article below so that you can have that. Adjusted gross income. If you make up to $400,000 and $200,000 as an individual, you'll qualify for the regular tax credit, which is $2,000, but you won't be qualifying for the extended tax credit. If you make more than $400,000 or the $200,000 for the individuals, it will reduce your credit by $50 for each $1,000 over the threshold. So that's a bit of the information. If you have any questions, shoot us an email. Check us out at thefuturemill.com or contact@thefuturemill. Thank you so much for watching.